Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. This is a recommendation from one of the subscribers, at least I believe he's one of the subscribers to the channel. Brad Rowland, love your videos. Could you do TT as one of your stock pick deep dives? Thanks. And that's what we're looking at today. Trane Technologies, ticker TT. This is out of the industrial sector. It is May 28th, wrapping up another month here real quickly. Friday will be the end of month, so if you want to get anything in the market for this month of May, make sure you get it in before Friday. Let's jump in and take a look at Trane Technologies. Before we jump into the video, if you could do me a favor, hit that thumbs up button down below. Make sure you subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Hit that notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the videos. And share with anyone you think that might find value in the content. Any investors out there, dividend growth investors or otherwise out there that you think might find value, go ahead and shoot this video over to them. Doing all that really does help a small YouTube channel like mine. Most importantly, subscribe and the notification bells and those comments really help. So thank you to all of you out there. Special thank you to those subscribers. Really do appreciate it. The channel continues to grow because of people like you. Thank you so much. Now this is the vested interest stock screener. This is how I set up the videos. We're going to run through this criteria. At the end, we will take a look and see if it meets 5 of 8. If this was a bank, it would need to be 6 of 9. And just because it meets 5 of 8 or 6 of 9 does not necessarily mean that I am investing. It just means it goes on my watch list or potentially goes on my watch list. It passes the initial screener, and then if I'm interested, I do more of a deep dive into the company, check out the financials, see what I'm willing to pay by doing a discounted cash flow analysis. And then, and only then, whenever the stock price aligns with that range and that discounted cash flow analysis, will I add it to my portfolio. If it is one already in my portfolio, this is a good back check to see if the company is still meeting the initial screener that I set up. You can use this screener, go ahead and tweak it to your investing strategy. Don't just blindly copy it. You know, we may have different retirement timelines. I'm in my mid 40s. Some of you younger folks might be looking for more growth. Some of you might not like the payout ratio of 75% or more. Some of you might have other criteria that you look out outside of these ones. So tweak it how you want. Go ahead and use this. It could be a good starting base, but don't just blindly copy me or anyone else on YouTube. Now back to Trane Technologies. Go ahead and check them out at their homepage, www.tranetechnologies.com. That's www.tranetechnologies.com. That is their homepage where I pulled this information from. We are climate innovators with the courage to look at our world's challenges and see endless opportunity. We aren't afraid to make bold commitments that set new standards to enhance the health and well-being of our communities, customers, employees, and planet. Together with our brands Trane and Thermo King, we bring efficient and sustainable climate innovations to buildings, homes, and transportation. What does that all mean? They are a heating and cooling company that provides under their two main branches, Trane and Thermo King, these other brands as well. Alco, I think, is a European. Fridge Block was European, American Standard. ICS, Cool Energy, Ameristar, MTA, Oxbox, Run Through, Thermocold. So these are the brands that they run, excuse me, these heating and cooling under. Mainly Trane and Thermo King, but again, underneath them are these sub-brands as well. And I think Alco and Fridge Block are European. So that's what they do. They're a manufacturer of heating and cooling units. Your HVAC unit outside, maybe a Trane brand, maybe another brand out there. All right, we are talking about Trane Technologies, ticker TT, again out of the industrial sector. Reason we are taking a look at them, down 2.84% on the day. They did close out the day $328.31 per share. Big drop on the day. You can see that drop here. 52-week range as low as $162.04, as high as $338.09. Definitely closer to their 52-week high than their 52-week low on this one. I would want much more of a pullback. Even with a 2.84% drop on the day, they need to come down significantly for them to be close to their 52-week low. I like to try to enter a position whenever they are within 15% of a 52-week low and they align with my discounted cash flow analysis. Market cap of $74.314 billion, a beta of 1.2, more volatile than the overall market. You can see some of that volatility right here throughout the day, right? Big drop, then it looks like they tried to recover, drop again, tried to recover, bigger drop, tried to recover, more of a drop. Overall down on the day. PE ratio, price to earnings, $34.71 per share. This is high. I would expect a company like this to be in the teens, 18, 17, 16, preferably 15 or lower. For a company like this is a well-established brand, Trane Technologies, right? I'm well aware of them. I have two cousins down in Texas who both own HVAC companies installing units. They're well aware of them. They use some other brands out there. I don't want to get into their business too much, but Pretty established brand. They are, a lot of more people are adding HVAC units to their homes as the weather gets warmer out there. So it's probably a good time to be looking at them. But I don't know. That seems to be an awful high price earnings ratio. That's what you would expect for a fast growing IT company, right? Pretty high PE on this. EPS, earnings per share, $9.46 per share. Earnings date coming up August 7th through August 17th. Can you believe we're even talking about August already? But hey, we're already in May. That's just the way it is. About to enter into June. Forward dividend yield, $3.36. That's they are quarterly payers, so that's their annual payout. Divide by 4, or we will see that here in a minute. Just hold on a second and I'll show you what they're paying per share per quarter. Dividend yield of 0.99%. Very low starting dividend yield on this one. Lower than what I typically look at. Ex-dividend date of June 7th. So their ex-dividend date is coming up. If you were to buy them now, you would be in line for that next dividend. You want to buy them June 6th or before to be able to make sure you lock in that next dividend payout. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information, $334.17 per share. So speaks to some potential upside appreciation on this one. Now we're going to jump over and look at dividend yield theory and see if this one is potentially undervalued. To do that, we look at their 5-year dividend yield average of 1.55%. We compare it to its current forward annual dividend yield of 0.99%. Since it is lower, that speaks to potential overvaluation on this one, at least according to dividend yield theory. Now their payout ratio is very low at 32.66%. I look at 75% or less, so this is much lower than what I am comfortable with. Anything under 50% is very low, so they have lots of room to cover their dividend, continue to make payments on their debt, reinvest back into the company, make any acquisitions, lots of free cash flow here, and that's what you're looking for. You want that dividend to be well covered, and this one definitely is. We're going to take a look at free cash flow because we want growing free cash flow. Typically, if a company has growing free cash flow, they can continue to pay down debt, make acquisitions, pay their dividend, which is very important, and increase that dividend over time. Buyback shares is another one. So going down here, looking at their free cash flow, going back to 2020, you can see here $1.2 billion. Jump up in 2021 up to $1.3 billion. 2022, a little bit of a drop down to $1.2 billion. 2023 back up to $2 billion. Nice overall, I would say nice steady growth. Because the repurchase of capital stocks, they are repurchasing shares. And if you look here, though it looks like 2021 to 2022 was a little bit of a drop, they also increased their repurchase of shares from 1.1 billion to 1.2 billion. So that could account for some of that, if not all of that drop in free cash flow. It looks like they drop it down a little bit here in 2023, but overall, nice growing free cash flow. Now we're going to jump over to stockanalysis.com. I always recommend more than one source so you can make sure the information you're getting is accurate and up to date. You pick any sources that you like. Stockanalysis.com and Yahoo Finance are just two sources that I like for information. I'm not affiliated with either. They're just two sources I go to. And again, you pick any ones you want. Just make sure you're not just blindly following one source. The information could be outdated or inaccurate. Now, they have 14 stock analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a buy and a hold. This would be a strong sell, sell, hold, buy, strong buy. And if you were to go to stockanalysis.com, you could click on each one of these and you could see how many of the 14 analysts call it a hold, a sell, a buy, or strong buy, or a strong sell. And it looks like just slightly more are calling it a buy than a hold or a sell here on this one. Now, they do have a low estimate of $210. That would be a 35.97% decrease from where it currently sits, and that would be a much better entry point in my opinion. Down here, it definitely needs to drop significantly for me to be interested. This one is, again, right close to its 52-week high, and that is not where I like to buy companies. Average of $296.64. That would be a 9.56% decrease. And the only way you're making any money as far as price appreciation is if it happens to hit their high at $366. That would be a 11.59% increase from where it currently sits. And again, I would look for something back here in the 200s, or lower. 296, 250, somewhere in there. I'd have to do the math to see where it sits at 15% of its 52-week low, but too high for me right now anyway. Now we're going to jump into statistics, look at how efficiently this company is reinvesting its capital. And to do that, we look at return on equity and return on invested capital. ROE, return on equity, sitting at 32.10%. That's much higher than the 10% I'm looking for. Return on invested capital, same thing, 20.3%. I look for 10% or better, twice what I'm looking for there. Earnings per share growth, I like 5% or better on this one. They have 10.25 projected over the next 5 years. Very good. Revenue growth forecasted at 8.54%. Very good numbers overall on this one. Again, the only thing I don't really like is the current valuation on this company. Let's check out the dividend history here real quick. as you can see, quarterly payer, low payout ratio, again, under 50%, 35.9. Dividend growth, nice dividend growth, double-digit dividend growth, 11.97% dividend, and 13 years of dividend growth. So very good numbers overall. Buyback yield, 0.83%, good. Always want to see, if a company's buying back shares, you want to see buyback yield positive. Shareholder yield of 1.84%. Overall, very good numbers for this company. Trane here, again, just the only thing I don't really like is the cost per share right now. I'd like to drop back into the 250 lower range there. But let's wrap this up. Dividend history here, we're going back to 2021. As you can see, they were paying 59 cents per share. Raised it up March 3rd, 2022 to 67 cents. Raised it up again March 2nd, 2023 up to 75 cents. Most recent raise was back here February 2024 up to 84 cents. They do pay out on that March, June, September, December timeframe like most companies do. Overall, very good numbers for Trane. The only thing I don't like is their current valuation. I would like to see them pull back more here, back under 200. Really 250 or lower I think is where they need to be, but I need to do the math to see where they're at and do a discounted cash flow analysis on this one. Well, let's run through the screener real quick. Understand the business. That's where we started. Check there. Growing free cash flow over the last 4 years, expected in the future. Check there. Growing dividend. Nice growing dividend. Double digits. Dividend payout ratio of 75% or under 50%. So very good there. Check valuation based on dividend yield theory. It was not potentially undervalued according to dividend yield theory. So no check there. It is not within 15% of its 52-week low. It's not in my portfolio, so it's not under my cost basis either, so no check there. Return on invested capital and return on equity equal to or greater than the industry average or 10% better. It is over 10% for both. Check there. And earnings per share growth was double digits. I like 5% or better, so check there. And that's 1, 2, 3, 4, 5, 6 out of 8. This one would definitely make it on my watch list. So interesting company here. I just want more of a pullback closer to its 52-week low on this one. Good company. Really appreciate the suggestion on this one. And that is really it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if there's someone out there who has a suggestion for a future stock pick of the day video, go ahead and drop it down in the comment section below, and I'll work into the rotation on a day that the company pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount that comes losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice, counsel, or certified financial advisor.